So I think it's safe to say that everyone kind of has a little bit of BitMEX trading experience. Yeah, you guys have been trading for a little bit.
A lot of the guys that aren't from the inner circle have expressed that they are newbies to BitMEX.
Hey, there's nothing wrong with that, guys. We've got to learn somewhere. So, like what I said a second ago, we got to understand that the volatility of BitMEX does make it a little bit of a trickier platform to trade on. But obviously the rewards are there because we can long and short, particularly with margin. But, if you aren't necessarily familiar with BitMEX, you can jump on the test net. It's not as good as what trading on the actual live the live exchange is, but the beauty of using those smaller leverages is that you can trade with smaller amounts and just get a feel for things. And as counterintuitive as it sounds, you can lose a little bit of money, but it's from those losses that you learn the biggest sort of trading experiences. And in that email that I sent out and on our website as well, we do have a beginner guide to getting started on BitMEX, how to transfer funds, some examples of leverage and sort of how to get into it. That's a completely free guide. Feel free to download that. But again, ask as many questions as you like tonight. And yeah, I'm a noob. I put some money in the other day and haven't really been game to start. Perfect. Well, you're in the right spot.
There it is there.
Good stuff. All right, guys. Enjoy.
What do you reckon, Don? You there?
Yo, sorry, bro.
That's all right.
Radio, for those who don't know me, my name's Donnie. This is for the guys who aren't our regulars here. I'm one of the traders, instructors, owners, whatever you want to call me, from Unity Trading Group with Ads and Ty. I normally run the guys through a couple of lessons a week on trading strategies, technical analysis, moving into different indicators and things like that, along with the help of Ads and Ty. The reason for tonight's lesson is a little bit off book of what we normally do. Normally we run a session on a Tuesday and a Thursday, but I've just been getting a various amount of messages lately on Discord from our members about just basic things with BitMEX that they may need a little bit of a brush up on. They're not quite understanding or maybe never learned in the first place. They may not have been around when we first started throwing out our content, so they may not know. So I thought we may as well just do a bit of a brush up course. I'm not going to go right into the depths of how to start on BitMEX. As Ty just mentioned, for those who haven't traded on BitMEX before, if you go to our website, unitytradinggroup.com, right down the bottom, you scroll down, there's a guide here. If you click on that and get your PDF guide on how to set up your BitMEX account, runs you through all the steps on how to get started, how to place trades, and familiar yourself with the interface. So we're not going to go into the full depths of how to get started tonight. This is more so just brushing up on a few things that we've noticed a few of our members struggling with, or maybe just overlooked in the first place. So yeah, we'll get stuck into that. Now, one of the main things I want to go over was fees. Fees and understanding your profits and losses, because that's probably the most common questions I get is, how come I didn't make money when, it was a successful trade, but then I checked my account and I didn't make money. So the easiest thing, or the quickest one for that one is, you got to understand, for those who don't know, XBT is BTC. It's just the contract version from BitMEX as Bitcoin. It's just called XBT, but it's the same nominal value. On BitMEX, you only get 4 decimals. Okay, so you don't get the full 8 decimals or 1/millionth of a Bitcoin for a Satoshi sort of thing. So sometimes you're making profit on a trade. It might be very small. It might only be 1,000 Satoshis. So if you're making 1,000 Satoshis, it won't show up here because it's less than this. It's 0.1 of here. So it's the next one next to the 6. So it won't show up until you clock up to 0.0657, and then it will show your profit. So to delve into that a little bit deeper, if you go to your account here, this is a non-existent account. This is just one that we use for doing demos and stuff. So there's not really any active trading on here. But when you click on here, it will actually show you your exact amount that you make when you do a trade. Now, this is a close at the end of the day. So if you ever wanted to know how you went for that day, you can click on your account, and the first page it opens is your balance page. And if you have a look here on the date, so at the close of every day, it'll tell you exactly how much Bitcoin you made or lost. So for this day, this is just a referral payout of 284 Satoshis. So that's how much was made on that account that day. If it's a loss, then it will obviously have a negative there. So it'll say negative 284 Satoshis. So the easiest way to know how you went that day, if you're struggling to understand how much profit or loss you actually made, at the end of the day, check your balance, and that'll tell you exactly how well you went for that day. So yeah, that was probably the biggest confusion, is people not understanding that if you made a very, very small profit, it's not going to show up here on your total because it's only showing 4 decimal points. Now we do, I think on our BitMEX guide, we also give you a profit and loss calculator as well to work out your trades. So I don't think there's any trades in this because we only use this for a demo account. Where is it? Sorry, trade history. Yeah, so there's no data here because we don't really use this for trading. But when you go into your trade history, so when you want to specifically know how well you went on a specific trade, sometimes it's very hard to understand because the numbers here, they just don't add up, and you're looking at them thinking like, did I win or lose? I don't understand. I've built a calculator for this, so once you input all the details, it'll actually tell you how much profit or loss you made, gives you percentage, the amount of Bitcoin you made, and et cetera, et cetera. So if you download that guide, you'll get that calculator, and with that calculator, you can sort of go through each individual trade rather than looking at the daily close in your balance book to understand how much profit or loss you actually made.
Yeah, and what we're going to do is we'll pop that profit and loss calculator in the BitMEX channel after this chat as well, guys. So feel free to go over there and just download it direct from the Discord so you don't have to stuff around looking for it.
It's just a simple Excel spreadsheet. Just I've obviously changed all the values in it to calculate everything, and it takes into account fees and everything like that. Which brings us to the next thing that we wanted to chat about, which was fees, which is under references and fees. All right, so what some people don't understand is your fees, if you are actually paying a fee, is based on your entire order. So some people aren't getting it when they do a trade, and it might not be super successful. Like it's a successful trade, but the profit might not be, or the percentage gain might not be that high. And then they're looking at their account saying, why didn't I make money? Well, if you were a market taker on both sides and paid a fee, you're paying a fee on your entire order. So if you're 100 times leverage, which means you're generally only risking a small amount of money. Say if you're only risking, say, $10, for example, on 100 times leverage, you're actually buying $1,000. So, right, yeah. So you're paying a fee on $1,000, not the $10. So you're risking $10, but you're paying a fee on $1,000. All right, and then that goes both ways. If you're a market taker on both buy and sell, you're paying that fee on both ends. Buy and sell, you'll be paying that fee on $1,000. And not only would you be paying that fee on that, depending on how long you're open trade for, if you're on the perpetual contract rather than a futures contract, you'll also be paying a fee every 8 hours during the funding rate, if you're on that side of the book. For those who don't understand the perpetual, or the difference between the perpetual contract and the futures contract, in Bitcoin, for example, I think Ethereum also has perpetual. Perpetual contract is technically a futures contract that does not expire. So it's constantly running. There's no open and close period. It just continually runs. It's basically a betting platform or a lending platform. And you've got your contract details down here. And you can see here that the funding rate, if I put my mouse on it, it will change. So I can't really put it here. But see here where it says predicted rate, as I take my mouse off, it says funding rate. So the funding rate is based on the interest of the lending at the time. So depending on the interest rate for the lenders who lend the Bitcoin for when you buy and sell contracts, the interest rate at the moment is quite low. It's actually only 0.0053. So in 3 hours, if you were long, you would be receiving a rebate. So if you were in a long position right now, if I jumped on and placed a long position right now, and I'm sitting in this trade, in 3 hours, I will get a rebate of 0.0053% of my entire order. at that time of funding. Now, if I was in a short position, so if I jumped into a short right now, in the next 3 hours, I would actually be paying a fee of point. If I click on here, it'll probably tell me. Nope, not going to tell me. Oh, sorry, my trailing stops. If I was in a short, it would be paying a fee instead of getting a rebate. So you'll be paying a fee in 3 hours. If you hold your mouse over here, it gives you a predicted rate for the next 8 hours. So this funding rate happens every 8 hours. You have to pay a fee or a rebate, depending on what side of the book you're on. So it's telling you in the next 8 hours after the next 3 hours, the following 8 hours, you're probably going to be paying a fee of 0.01%. So take those into account as well, because they will affect how much profit you make. So sometimes if you're sitting in a long or a short position for longer than, a few minutes, half an hour, 2 hours, if you're sitting in it overnight or in for a couple of days on a low leverage position, which I do myself, you can sometimes end up paying a whole bunch of fees that you didn't realize. You go to close your position for a small profit and you go, where's all my profit? Well, you've probably paid, 5 or 6 lots of fees in that last couple of days that you didn't realize because you were sitting on a perpetual contract. So if you are going to do a low leverage trade, that generally plays out over a longer period of time. So if you're swing trading or taking a position for a short drop that could last a week or two, then you're better off using a futures contract, because the futures contract doesn't have a funding rate every 8 hours. It just has an open and close fee that you pay, and that's it. So to use those, you can use these ones here. So obviously this futures contract ends in a couple of days on the 11th of Jan. And then the next one is closing on March 29th. And then the next one after that is June 28th. So they're all currently running. So if you wanted to use those futures contracts, obviously they're a little bit less liquid in terms of getting your orders through than it is on the perpetual contract. This is where all the action is. This is where all the volume and action is on the perpetual contract. And it's mainly from the scalpers. So the scalpers are the people who are doing higher leverage trades. They're jumping in for those short drops in and out. They might hold a position for 30 seconds to 5 minutes. So that's where all the action is. So hopefully that clears up.
As well, just sorry to interrupt on it. Just for those newer guys as well, Don, what sort of leverage would you recommend people to go no higher than? Because we sort of see this 100x points club, doing all this silly shit. What do you sort of recommend for those newer guys on here to start off with trading? How high would you kind of
if you've never used BitMEX before, you definitely have to read our BitMEX guide. It teaches you a few real basic aspects of the interface that will stop you from making mistakes, because it's very easy to make mistakes. We've had members of ours make mistakes, and we've tried to help them the best we can. To start off with, definitely lower leverage, or use the demo account so you're not actually using any real money, or you can just simply do small contracts. You can do a single contract. You don't have to bet $20. You can bet $1. If you make a few mistakes doing a dollar bet, who gives a shit? So yeah, if you're going to get started and you want to have a play and understand how it all works and see how fast it is, because sometimes during high liquid times towards the end of the night, for us in Melbourne anyway, 2 o'clock in the morning sort of thing is when we get a lot of action. Sometimes you don't really have time to think. It moves that fast if you're scalping. So you really want to familiarize yourself with the interface and how things work. If you just go jumping in and then things start moving and then the servers crash and you sit there going, oh shit, what do I do? You need to know what to do first. So definitely read up on it and understand the interface. Low leverage to start off with, just to familiarize yourself how things work and how you pay fees and all that sort of thing, and how to be a market taker instead of a maker. Generally take a little bit longer. But yeah, it also comes down to your risk to reward and what you're actually trying to trade. So to get into the technicals of what leverage, as Ty said, what leverage should you guys be using? There's no real set figure. It's more so to work out your risk to reward. But in the current market situation, so the price of Bitcoin at the moment, it's at a very volatile stage because it's so low that it only has to move 30, 40 bucks and things are pretty wild. So you definitely don't want to be 100x or 50x right now. It's way too volatile for that sort of stuff. If you are very, very sure about your trade, you might be 25 times, but to be honest, I haven't been any more than 10x for quite some time since we dropped from 6,000 because it's just way too volatile. You got to understand. So a $60 move at 6,000 was not really a whole lot of movement at all. But a $60 at 3,000 or 4,000, that's a big difference. It's a big swing, and it's very easy to get liquidated if you're on high leverage. So definitely don't do high leverage. But the correct way to actually work out what leverage you should take on a specific trade, that comes up to a little bit more planning. For those who aren't familiar with technical trading, I'll just make this bigger for a second so I'll get all my tools back. For those who aren't familiar with technical trading, you sort of get a little bit ahead of yourself, so you might want to step back a bit and understand the technicals, or how to use TradingView and things like that, different tools. But we've got sections in Discord for that as well. So to work out the correct leverage that you would use on a specific trade, you have to understand exactly what you want to risk and how much you want to lose if you get it wrong. So let's just say, for example, I'll move it over here because we haven't seen it yet. So let's just say this is where we're going to buy. We're going to put our stop losses below these wicks down here somewhere. All right. And our target is, I'm just making up a target, and it's up here somewhere. All right, so our risk to reward ratio is 2.6 to 1, which isn't too bad. Anything over 2 to 1 is acceptable, but it's not ideal. You obviously want it a lot higher than that. But if you take notice here, our actual stop loss is 2.27%. All right. So if you were 100x right now, you would actually be liquidated about here somewhere. Whoops, wait, let me tool then. Try again. What's going on? There we go. You would actually be liquidated about here. Okay, the reason for that is if you're 100x, then that is 100% loss of your trade. You can't lose 100% loss on your trade because the margin lenders need to make a fee or need to make commission. So your liquidation price isn't 100%. Your liquidation price is more like, correct me if I'm wrong, ads around 70%.
I believe it's 74.9 or something.
74.9, 75%, something like that. Okay, so your actual liquidation price would be, well, it's a little bit off, somewhere around there. Okay, so you couldn't do a 100x trade on this because you would lose all your money before your stop loss even hit. Okay, so you can't do 100x. Can you do 50x? Well, 50x would be double. Okay, so you would still be 100% loss here, and your liquidation price would be at 1.4-ish, something like that. Okay, no, you can't do 50x because you'll still be liquidated before your stop loss hit. Okay, would you do 25x? 25x would mean your liquidation price is, so 4, so it'd be 2.8. Your liquidation price would be about there. Okay, so that means your stop loss would hit before you get liquidated, but that still means you're going to actually lose. You're still going to lose about 50% of your money before you get liquidated. Okay, or something like that. So yeah, so what did I say? 2.8. Yeah, so that's where your liquidation price is. So yeah, your stop loss would be at about 50%. So if your trade actually went wrong and you got stopped out, you would actually lose 50% of the money you risked. So you wouldn't do 25 times either. That's way too risky right now. Or it's not so much that it's risky, but your risk to reward or your stop loss margin for error is way too large to be using higher leverage. So you would probably drop it down to maybe 10 times maximum. And even at 10 times, so that gives you obviously a fair bit more margin for error. Whoops. Whoa. Your 100% loss is down here, so 7.5-ish around there. That's your actual liquidation price. So your stop loss is actually only about 23%. So if you put in $100 and it went the wrong way and you got stopped out, you would lose $23. Okay, if you didn't have a stop loss in place and it went all the way down to here, you would actually lose all of it, $100 gone. So you always have to have or you definitely should run stop losses in place when you're margin trading, because if it goes the wrong way, you want your stop loss to trigger for as minimal loss as possible, rather than being liquidated and losing your whole $100 or whatever it is that you put in. So if you've got no room there to put a stop loss in, that means you're running too high leverage. And you don't going, oh, well, I'll just run my stop loss to here. Well, you're putting your stop loss in the wrong spot, because you've got several wicks here that are showing you that price can definitely come lower than where it is right now, or definitely lower than that wick anyway, because we've already tested these layers already. So there's any bit of chance that price will come back and retest these positions. So you definitely have to go below it. You would use other technical analysis to really pick where you would put your stop loss, but that's beside the point of what I'll try to get at. Is your leverage is something you should choose depending on the trade you're about to place. If it's a very, very small margin for error, meaning it looks so tasty that your entry is right down here and your stop loss is like here, well then, yeah, up your leverage 25 times, 50 times. If you're up for a gamble and you really think you're going to win, or you're waiting for confirmation to actually get it moving, 100x. But definitely don't start like that. You should definitely be lower leverage to begin with to understand how everything works. So getting a little bit off track, but to the answer of what leverage should you be using, that should be based on the type of trade you're about to play. But I definitely recommend starting on lower leverage to begin with. If you haven't used BitMEX before or any sort of margin leverage trading at all, start on 3x, start on 5x. Yes, you're not going to make as much profit because obviously the moves aren't going to be as significant. But the difference is you've got so much more room for error. You're not going to lose much if you get your technicals wrong.
I think what Don's trying to say there as well, to sort of, for the newer guys, the appeal of BitMEX is very strong, and that's where we go and we make silly rash decisions and we don't stick to a trade plan, and that we think about the money before we think about the trade. So there's a couple of cardinal rules for particularly new people and even some more advanced guys as well, is that, you know, it's a marathon, it's not a sprint. You can learn from your losses, so don't get disgruntled if you lose a little bit of cash. That's why you stick to those lower amounts when you first start off. And what you also must understand is that there will always be another trade. If you've missed something or you've set yourself up and you've missed the trade, don't sweat it. Go and take 10 minutes, make a coffee, take a step back, trade the next day, whatever it might be. But there will always be another trade.
100%. When you're trading up or down, there's a trade all the time. Don't chase trades on BitMEX. You will lose all your money. It's a very emotional type of trading because it's actually more like betting. So if you have a problem with gambling and things like that, it's probably not a good idea that you jump on BitMEX because it's probably not going to help you. But it can be very rewarding. You've just got to have a strong mindset and limit yourself, which is something we're pretty strict on with our members as well. I try to enforce it as much as possible. Doesn't always go to plan, does it, Paul? But limit how much money you have in your account and how much money you bet with. Okay, and I say, yeah, I say bet because this quite often what we're doing here with scalping is betting. We're gambling. We're not really trading. You're buying contracts on a speculation of a price being moved. It's more so gambling. It's not as much as trading. If you use margin trading or leverage trading in the correct form, it's a way to hedge your assets against a downwards or a bearish market. In which case you would be very, very low leverage, 2 to 3 times sort of thing, not 50, 100 times. Using those high leverages is to make money, in which case we're technically gambling. So limit how much money you actually send to your BitMEX account. You don't have to send all of your money. You know, if you've got 20 grand in Bitcoin, you don't have to send 20 grand to BitMEX. Send $1,000 there. Yeah. All right. That way, at worst case scenario, you know, if you have a bad night and you just keep betting and betting and betting and you go through that whole thing, you've only lost $1,000. You haven't lost your whole 20 grand stack because you're limited. Now you can't bet anymore until you transfer money. But if you get down to zero, and you need to top your account up, well, there's a bit of a reminder to, a bit of a kick in the pants to say, what are you doing, you fuckwit? You've just lost all your money. Time to stop trading and pull your head in, rethink your situation. Check your trade plans. What you've done something wrong. It's not working for you tonight, so don't keep doing it. So limit how much money you put in your account to begin with. If you're comfortable with $100, put $100 worth in there. $500, $1,000. Don't know what you're playing with. Everyone's going to be different, but there's no problem with chucking $100 in and doing some dollar bets, and just keep going, dollar bets until you really got your handle on it, and you're doing all right, and your account's starting to increase. Well, then start betting $10 and keep going. If you're still growing your account, chuck $50 on. Just keep going at it. You're going to have good nights. You're going to have bad nights. I've had plenty of bad nights where I've lost out. And to be honest, most of the time, it's not so much my technicals being wrong. It's being my head and emotional. You put a trade on, it goes wrong. You crack the shits. You jump in, you chase another trade. It fucking goes the other way. You end up losing that lot. You're like, fuck, this is just not working. It's time to go to bed. 2:00 in the morning, and I've just lost $500 or $600. It's time to go to bed. You're just not. You're not in the right frame of mind to keep trading. So give it a rest.
And Donnie as well. For our OGs know this as well, but there's a little bit of a sneaky little tool that we use to help look at liquidations or buys and sells, shorts and long positions. Don, if you wanted to bring that up for the newer guys, or we'll let the people know about significant trades.
Yeah, I don't have I think the link is in our Discord. I'm on my home computer at the moment, so I don't have all my
Can someone pop that into the chat?
In trading tools?
I think it is. Yeah, it should be in trading tools. It's called Sig Trades, and that's another tool to help us out as well. Because I believe it also shows hidden orders too, Don, doesn't it?
Correct. That's the main idea of it. Yeah.
Yeah. So on
well,
the
it
order
doesn't.
book,
Sorry, it doesn't show hidden orders. Sorry, it shows orders that have been completed.
Yeah, correct.
So what Ty's referring to there is with hidden orders, I can choose to hide my order. So if I was a big whale, and I'm chucking, I don't know, 100 Bitcoin on, and I don't want anyone to know that I've just put a big sell wall in, you can actually hide your order. I mean, it's kind of pointless for the money that we're sort of playing with, but whales will hide their order. So even right here, where you think the buy book looks really, really thin, there could be right here, there could be a $2 million buy order that you just don't know of because someone's hidden it in the book. But what significant trades will do, can you guys see my screen?
Yep.
You can see significant trade. It's changed a little bit. What significant trades will do, it will show you, it's not doing it at the moment because there hasn't been any because it's a bit quiet. I'll just change the settings to a lower amount. What are we on? Oh, we're starting to get some through now. Where's the value at? There, it's at 100,000. So if I just change that to say 20,000. Okay, so now any order that gets completed in the book that's above 20,000 will come in here. And this will give me an indication of actual buys and sells that have been completed. So at the moment, the orders are quite long at the moment. So there's more buying orders than there is short orders. It's a very, very handy tool when we're scalping. So me and a few of the other OG boys, we often, well, haven't done it for a while, so we've all been pretty busy, but we'll get on early morning, say between midnight and 2 o'clock Melbourne time. We find we get a lot of price action. So we'll stay up and try and catch that. And we generally have 2 screens open. We'll have significant trades open, and we're watching this because there's sometimes a little bit of a delay between BitMEX and significant trades. So you'll sometimes see a lot of big orders come through here before the price actually starts moving here. So it can give us a little bit of a head start on whether or not we should cancel our orders or go through with it, or flip them the other side. If we're going long, we might flip it and go short because we can just see that all of a sudden $5 million just went short. So we're going to try and catch that wave. So yeah, significant trades is a really, really handy tool. I don't know if we go through it on our BitMEX thing, but if you end up staying in our Discord and and participating in different things, you'll understand it. We go through it a fair bit. Very, very handy tool. So keep that one. And for anyone who didn't see where I pulled that from, if you go into our Discord channel, oh, sorry, Trading Tools is actually locked for
in the BitMEX chat, bro. It's all good.
Okay, cool. Yeah, so that Trading Tool is actually locked for our Inner Circle group. But Ads just said he put it in, where'd you say you put it, bro? Oh, BitMEX, there you go. So if you go to Crypto Analysis in the BitMEX channel here, Ads has just put it in here, the link to significant trades. So you can chuck that up. And what I like to do, I don't know if you'll see it, but I like to make it a separate screen. I think I'll have to do, bear with me. Can you see that?
Yep.
You can see two boxes.
Yep.
Yeah, so I like to do something like this. Okay. Oh, fuck that up. Make it a bit smaller. All right, so I've got significant trades going here, and I can see what's going on while I'm trading. So I'll be trading on this screen, and I'll be keeping an eye on this, and that way I can see what's going on. When you get some big price action, so if someone drops a million or 2 million short or long, you'll generally get in this box here will be a GIF. So just something to sort of bring your attention so you can go, oh, something's happening. Generally after a big position like that, you'll have a lot of smaller positions follow it up, which is basically the people catching the wave. So they'll be the people who are seeing those orders go through and then going, shit, 2 million just went short, I'm going short as well. So you'll get 50,000, 100,000, 100,000, 200,000, you know, just follow up behind it, just trying to ride his wave. So yeah, very handy tool, use it. Something I think I skipped over right at the start in regards to fees for the people who are still struggling to understand how much money they made or lost. With the fees, there's a difference between a market maker and a market taker. I'll go back to reference in fees. Okay, so you can see here, as a market taker, you pay a 0.075% fee on your entire order, okay? And for a market maker, you actually receive a 0.025% rebate if you're a market maker on your entire order. Now, for those who don't understand what a market maker and a market taker is, a market maker is somebody who places an order in a book. So I'll give you an example right now. I'm going to place a long position now at 3956. 3956, and I'll just chuck $1 on. Okay, I'm not going to bother hiding the order. All right, chuck me, cross leverage at the moment. Keep an eye on this as well when you go to place orders. This is all covered in our trading guide. By default, sometimes it's on cross leverage. What cross leverage means, it's actually going to use your entire account as margin. If you have this ticked and you go wrong and get liquidated, you are going to lose all of your money. Do not do that. Make sure you click on, 3 times, 5 times, 10 times, something, whatever you're going to trade with. Make sure you click that first. So I'm going to do one single contract, which is $1 worth at 3,956. So that's down here somewhere. Place long. Okay. Yep. Buy. Now I am now a market maker. Okay. So my order has been placed into the order book. My order's in here somewhere. Okay. If price comes down and touches it and my order gets filled, I will then receive a rebate already. Even if price sits still, I will actually receive a rebate of 0.025% of my entire order. So I'll receive 0.025% of $1 because that's how many contracts I bought. I bought one contract. If I was to buy 1 million contracts and I became a market maker, then I would receive 0.025% of $1 million. Just for becoming a market maker, just for putting an order in a book. Okay, the price hasn't even moved yet and I've already made money. The only thing is, to close that order in the same amount of profit, I also need to be a market maker when I sell. So to do that, you would have to set your sell order in the book as well. So I would then say, just for this example, I'm going to put a sell order at 4,100. Oops. I'm not going to go into the details of everything here, but if I put that sell order in at $1, okay, I now have a buy order in the book and a sell order in the book, or technically a long and a short. So if price comes down and hits this price, I'm going to make a 0.025% rebate. If price comes up and touches that after there, well, then I'm also going to receive a 0.025% rebate on the $1 again. And I'm also going to make profit on that move there at 10 times. Okay. Does that make sense? I can't see the chat, so
the only fees you would have paid would be the funding rate, right, Don?
that's if you were in the funding rate during the next 3 hours. And
Yep.
in fact, if I was long during this, during the funding rate, I'll actually receive a rebate there as well. So if you timed it correctly, if I left this order in the book right now and I timed this correctly and I got to buy here, and then in 3 hours time, I hit a funding rebate and then I hit here and sell, I'll actually receive a rebate for placing the order. I'll receive a rebate for selling the order. I'll receive a rebate for having an order in during the funding rate, and I'll make 3.63% on the $1 order. And that's the benefit of being a market maker. You're applying liquidity to the order book, which is giving the exchange more trading volume. Okay, now the difference between a market maker and a market taker, well, a market taker takes an order out of the book. So these are all market makers. These are all orders that are already in the book. If I want to jump in right now, what's the price right now? 4016.5. I'll put 4017. So I get an order straight away. So if I press buy right now, I just bought someone's order. Okay, so somebody already had a sell order there. I just bought their order. So I'm now a market taker. So I'd actually pay a fee then of 0.075% fee of $1 because I just took liquidity out of the book. Okay. Now the same applies when I go to sell it. If I go to sell it by taking an order out of the book, so if I go to sell this now at, was it 40175.5? So if I sell this now, so I'm taking this order out of the book, order filled, I've just now taken more liquidity out of the order book, which means I would have paid another fee. And I didn't even make profit on the order. So one thing that's a lot of people are getting stuck with is the fees. The difference between being a market maker and a taker. I know it doesn't really mean much when you're buying one contract at 10 times. It doesn't really make that much difference. But you know, quite often you'll buy $300, $500 worth of contract sort of thing. It's, you know, not unusual. Well, you think at 10 times, 100 contracts is still only $10. You're only risking $10. So that's $100 you're risking at 10 times, but you're still paying fees on 1,000. Let's bring up if there is a calculator on this computer. There we go. All right. So 1,000 plus, was it 0.075%? So it's 75 cents every time you place an order, even though you're only risking 10 times $100. Right, but that changes when you're using higher leverage. You're sometimes buying 30,000, 40,000, 100,000 contracts. You know, I've seen dudes pay $300 in fees on an order, and then they're, you know, jumping up and down because they made $600. It's like, dude, you paid $300 in fees. Not that good. So definitely pay attention to that. Always best to be a market maker. So always place your orders in the book. Now that also brings me into the next one, which, Paul, I wanted to double check that you got through this as well. Paul's one of our Inner Circle members, and he was a bit unaware that you could do this, which is placing orders in the book before your order actually hits. So let's just say I have a trade plan. And Paul, I wanted to run you through this as well. So this is one of the reasons I wanted to do this session, was to run you through this as well. So this is what I do. If I'm going to place an order, I do my technicals and I find out where I think I'm going to place a trade, where I think it's going to go, where my stop losses are going to be. So let's just say I'm looking to buy down somewhere. I'm just as a full example, I'm not really going to do my technicals on this at the moment. Let's just say that's where I'm buying. Okay, so I'm going to buy on there. I want to try and take profit at the top of that wick here. So this is where I want to take profit, right up here. And my stop loss is probably going to be that wick there, okay? So I'll bring that up like that. Bam, that's my trade plan. That's exactly what I want to do, Paul. So I know where I want to put my buy order, I know where I want to put my stop loss, and I know where I want to put my take profit. Okay, so now what we do is we go, okay, where's my buy order? It is at 3,972. 3,972. I'm going to buy one contract to go long at 3,972. Bang. That's in the book. Okay, you can see here, this is in the book. Hasn't hit, hasn't been bought, but it's in there ready to be bought. Now, one interesting thing before I keep going is if you want to actually readjust your trade, you can actually just grab it and drag it. You can see here it's amending and it's changed it. So now I've just changed my order down to 395.50. You can do that on the fly for whatever reason. I do it all the time. Sometimes I just chuck an order in a book and then I'll move it around to where I actually want it, rather than trying to get the exact price typed up here, because sometimes you just don't have time. But in this case, we do, because we've got plenty of time to make this trade play out. Okay, so that's our order. It's in the book. It hasn't been hit yet. Where's our sell order? So this is where we want to take profit at 4127. So we're going to put a sell order of 4127. Now we're going to put reduce only. So that means if this order hits, we will not be buying more contracts. We'll only be reducing. Sorry. Because it hasn't hit yet. Just do that one for now. So it goes in the book. And same deal, you can grab this and move it around if you want to readjust. If you think like, oh, you know what? I don't think we're going to hit here. I reckon we might hit here. So just move it down like that. Hasn't bought anything yet, hasn't executed, but it's in the book ready to go. Okay. So there's my buy. There's my sell for profit. Now I've got to put a stop loss in. Now this may not let me do it, but we'll chuck it in. 3939, sound good? Oops. Okay. You can move it around if you want to. I think I might move my stop loss down a little bit further, whatever. If you put it back to where we had it. Okay, so that's pretty much bang on our trade plan. Do you see that, Paul? We had our trade plan here set up, our range. We knew where we were buying. We knew where we were selling for profit. And we knew where our stop loss was. Now you can pretty much delete this. And you can go to bed. Okay, because you know it's going to play out. Well, if it plays out to plan, you're going to make profit. If it doesn't play out to plan, you're risking losing. Oh, that didn't work. You're risking losing about 8%, 9%. Because we're on 10 times, remember? We're on 10 times leverage. So we're going to lose 10% or we're going to win for 40%. So 39.6%. All right, that is how you set up in order. You don't just put a buy on and then let it go and see where it goes and then decide when to take profit, because there's a good chance you won't get time to execute the trade. Put your orders in first. Make sure you've got stop loss protection. Make sure you know where things are going. So definitely do your technicals first. You don't just go place a bet on. You may as well flip a coin and say heads or tails, or up or down, green or red. You need to have an idea of where things are going. That was about really all I wanted to cover. Ads, if you've got anything you want to add, otherwise we're going to jump into some questions if there is some.
No, you've covered it really well, Don. I think we had a couple of questions of what is limit, what is market, and what is stop market.
Okay. So you're referring to up here. So limit, these are orders. So this is where you place your orders. This is obviously for the people who aren't familiar with BitMEX or lending or anything like that. So limit is you're buying a contract at a specific price. So you want to buy it at this price. or you can key in whatever price you want. I only want to buy it if it gets down that low. All right, buy long, buy short. Okay, so limit is pretty much you're just limiting the price that you want to actually buy at. I don't want to buy it now. I want to buy it here, specifically here. So you key in that price. So that's a limit order. Market will literally just buy it where it is right now. So as you can see, there's no box to actually input the price that you want to buy at. You're just going to buy it at whatever price it is now. Essentially, you're buying it straight out of the book. So the next available order in the book is what you're going to be buying. So if you do this, you will be a market taker because you're taking an order out of the book. With a limit order, you're being a market maker. So I tend to use limit all the time. I'd never really use market, apart from when you use stop losses, because that is a last resort of things going wrong. So that's the difference between a limit and a market. Basically, when you place your orders, this one, you're telling it where you want it to buy at. This one, you're just buying it right now. At whatever price it is, that's where you're buying it. Stop market, and there is actually other options for your stop market. So these are more conditional orders. This is what this is called. So a stop market is basically you're going to sell it at market price when it gets to that price. Okay, so you're telling it, it's essentially like a limit. You're saying when it gets to this price, execute the trade at a market price. Okay, so you're not telling it to sell it at this price because, oh, hang on. Try that again. I don't know why this doesn't work. There we go. Say that's where you're going to put your stop price. It's not going to sell at that price. It's going to execute a market order at that price. So if we get a big red candle that just busts through that, even though your stop loss here, your market price is here, you may actually sell down here. Depends how much liquidity that big red candle has. You know, how many orders there are in the book. If the next available order is down here, well, that's where you're selling your order. You know, you're going to lose big time. So that does happen. The stock market's your last resort if things go wrong. So that's the difference between a stop market. You're telling it where you want it to execute a market price. So this is a when things go wrong order. Stop limit is virtually the same thing, only you're telling it where you want it to put your order in the book, so it's to become a market taker. Okay, so what you would do is that would be your stop price, and this is your limit price. So if price comes down here, it has to hit here, and then it will put an order in the book here to sell your order. So if price comes back up, then it will sell. Okay, and that was how you avoid being a market maker, market taker using a stop loss. Trailing stops, that's a little bit different. So you actually give it a value that you want the price to trail behind. So let's say the price is here. Get all these out of your way. It's getting a bit confusing. Let's just say this is where your trailing stop is going to be activated. As price comes down, or actually it's probably better to do it where it is right now. All right, so my trailing stop is, what's that? I think $1. Let's just put it, let's just assume that that's $20 or $25 below the price. So if I type in 25, right, what that's going to do is put a stop loss in $25 behind the current price. So right now that'd sit there and not do anything. But if price starts to go up, this will start to follow it. It'll basically sit behind it by $25. All right, so if price goes boom up here somewhere, get this out of your way. You know, if price just skyrockets all of a sudden and goes up here, my stop loss will go up with it and still sit $25 behind it. Okay, and then as soon as price reverses and starts to come down, bang. Right there is where my trade got executed. Okay, so I put my stop loss down. Get rid of this. Yeah. Sorry. I put my trailing stop here. It followed the price all the way up, and then price reversed and executed my trade here. So that's a really good one for taking profit in your sleep as well. But you got to be lucky. You got to definitely know what you're doing to be setting trailing stops. You can treat them as trailing profit take as well. Take profit limit, much the same way we do a stop loss limit, a stop limit, which is you virtually have a trigger price that you want your limit order to be put into the book. Okay. And then you've got obviously take profit market, which is the same thing, but you'll be a market taker instead of a maker? That should answer that question. Anything else adds?
Yeah, heaps of questions, man. So,
Ah.
so
Okay.
Smalley asks, so if there's a run, you can move your sell order without changing anything in the order column, just drag the screen tag.
Yep, you certainly can. We just showed you that. Is that, I'm assuming that's what they mean. So right now, where's the price? Yeah, let's just set it nice and low. So right now, I'm going to put an order in the book, just as an example. All right, you can grab it and move it to wherever you want, and it will just keep readjusting. It's not going to buy anything unless, of course, I move it right up. Unless, of course, I move it right up here, then it will buy it. But yeah, if I go, oh, you know what, price is coming down. Say if I have my buy order here, and then all of a sudden it got really, really bearish, and I'm like, oh, you know what, I think it's going to go lower than that. Well, you can grab it and move it. And you go, oh shit, looks like it's going lower. You know, fuck, actually this thing's going to fucking tank. If it's going to tank, just delete your order. Go on. I don't want to buy that shit. Go on to the fucking ground. And you can do the same thing with your sell order. If you already had an order in the book and you got your sell order up here, and then all of a sudden it looks like, oh, this thing's going to fucking go to the moon, we'll just move it up a bit. You know, you can grab it and move it on the fly. That's no problem at all. That's generally how I do it, because I find you don't really have enough time to be chucking your mouse up here and trying to look at the price and key it in here, and then all of a sudden the price is already past it, and you're like, fuck, you got to change it again. So I prefer to just to grab the tag and slide it up and down. It's much quicker. So yeah, that answers that one.
Very good. Leanne asks, what happens if it doesn't buy and goes up to your sell order? You would use reduce only, wouldn't you, Don?
Yeah, correct. So the difference between so first execute immediately against the market. Yeah, okay. So when you want to place an order, if you do post only, it will never buy at market price. It'll only ever buy at a limit. So you never pay a fee. So if you were getting really risky and you wanted to put a buy price right now, but you wanted to avoid being a market taker, so what you would do, so you know where the price is, it's 4023.5, so 50 cents, and you can see here that there's an order in the book $1 above it. All right, so what you could do is, but let's just say the price was fluctuating so much between here, you wouldn't have enough time to put an order in the book at 4023, because there's a good chance you'll end up buying at market price. So what you can do is go 4023, all right? But if you put post only, it will not place this order if it's going to be paying a fee. Okay, so let's see what it says. Order submitted. Okay, we're in because price went up 50 cents. Right, we're back down. So now if this hits, we're still going to be a market taker because we had post only to never buy at market price. Now, if the price was still 4023 and I put that order in, it would cancel the order. It'll say, nope, you're not allowed to do that, because if you did that, that'll be a market, and you've already told us that you didn't want to put a market order in, so it wouldn't let me do it. Okay. Now, and for reduce only, so now I've got an order in the book. So if I want to put a sell order, say 40.50, and put a sell order in, let's just say I put 5. Can I do that? Will that let me do it? Yeah. See how it reduced it down to 1 contract? Because I got reduce only, what will happen is, if it hits this, it will reduce my my order to 0. It'll reduce my contract by 1, and I've only got 1 contract. But what will happen is, because what can happen if you put a stop order in, let's say 4005. 4005. Is that right? Yep. Okay. So what can happen if when I place this order here, this other limit order, if I didn't put reduce only, if that wasn't ticked, all right, what would happen is the price would come down, it'll hit my stop loss. This order would stay in the book. It would stay there. And then overnight, if price come up and touched it, then all of a sudden I've just bought a short contract when I didn't really want to. Okay, so if you got to click reduce only, and that will never allow it to buy any more contracts. It'll only reduce the amount of contracts you've got. It'll never buy more. So now if price buys, comes down and hits my stop loss, this order disappears. It's cancelled. Or sometimes it'll stay there. Sometimes they have glitches and it will actually stay there, but if price actually comes up and hits it, it'll cancel it. It won't actually allow it to buy because you've ticked the box of reduced only. Hopefully that answers that question.
Nice, man. All right. So we answered that one. Sony asked, can we close all of our positions before the funding time and avoid funding charges?
Certainly can. You've got about 5 minutes or 15 minutes right before the funding rate to get out of a position. I don't know if you guys saw me then, I just moved these really, really close now. I'm zoomed in quite far just to show you what it's like when you actually close a position. Yeah, so if you have a look here, 2 hours, oh, sorry, when I go over it, you can't see it. It says 2 hours. When that gets down to 15 minutes, if it looks like you're about to pay a fee, and it's going to be quite a hefty fee, because right now that's 0.0053% rebate, which is bugger all. I've seen that up to like 0.33% fee. You know, if you've got a $1 million contract, it's a significant amount of money. So you don't want to be sitting in that. So if that's the case, you can close your contract 15 minutes before that funding rate and you will not pay a fee. You will not pay the funding rate fees. But remember, 15 minutes or so before. So just make sure if you're trying to avoid those, 15 minutes either side. Sometimes you'll get a lot of price action leading up to funding rate as well, because those whales who may be trading and they're about to pay a nice big fee, they'll sometimes close positions, and other whales will take advantage of that and try and stop hunt as well. So yeah, there's generally a little bit of price action leading up to a funding rate. So it is always worth having a quick squeeze as well. When you're about to play, you log on to BitMEX, you're about to have a bit of a trading session, just suss it out and see where we're at. If it's 8 hours away or 6 hours away, don't stress. But if it's down to like an hour, just pay attention, because there could be some price action coming up. Doesn't always happen, but sometimes it does. Yeah.
Don, can we get an example of a short Randy asks?
Yep, certainly can. I'll just close this position.
I think we've only done long so far.
Okay. Well, it's much the exact same thing.
I'll just the opposite way around.
Yeah, I'll just hopefully get these ones to close. I'm trying to make these close just so you see how it works rather than just closing the position manually. You can, if you go down to here, see how it says close position. So I'll just scroll down a little bit. So these are my current positions. I've only got one position open. If I press market right now, that will just close my position at market price. I'll lose money and I'll be a market taker as well. So I'm just leaving my orders in the book here, just to show you what happens when they get executed. So it looks like it's a large amount, but we're in like 50-cent intervals here. Yeah, nice and close. All right. The next 50-cent movement should close our order, whether it's in a market close or a limit. There we go. It's eaten through the book. There we go, closed. So order filled. Now, the stock market will delete once it's on, because that was on reduce only as well. All right, so to place a short, exactly the same way. But if you're trying to not be a market maker, well, then you just got to make sure your order's above. So let's say we're going to put a price on 402.950. So 402.950. Oh, not that much. All right, and then you simply just press sell short like that. And any second now.
40,000 is pretty high, bro.
I don't think we're going to get there. That'd be why I couldn't see it on the screen. I'm going to leave that order on just in case. Just in case overnight we get a bit of a spike. All right, so now there's my short position, okay? And then if I want to set my take profit, it might be, say, 4,000. So we'll go 4,000 long. All right, and that'll just put an order down here.
But because you didn't press reduce, if your if your short doesn't hit, you might buy along there.
That's right, but you can't click reduce only if you haven't already bought a contract. So you can't put a limit order on, like a profit take order, as reduce only if you don't already have a position, because you can't reduce zero, if that makes sense. So you have to wait until your orders hit before you can set reduce only. So you wouldn't just set this and walk away. You would, play it.
Yeah.
And our stop loss is going to be 4039. This time we'll do a trailing stop, and I'll show you how that works. So a current price is 4025. So what's that? That's what, $15 up to there. So let's just go $15 long. Okay. So there's our stop market order, all right? But it's a trailing market order. So now if price starts going down, this will actually follow it. But it shouldn't be active until I actually buy the short. I'll just get this short bought. Hopefully. It sucks when we try to do these talks or examples and stuff, and we have no price action. It's nearly impossible to get hits and stuff. It's a pain in the ass. But hopefully we get a little bit of a bouncing around at the moment to get this order hit. And then you can see the trailing stop in action. Now this interface is also fully customizable. From default, I think the chart is really, really small. It's only a small box. And you got the depth chart and stuff as well. I don't see the point in having the depth chart when you got the order book, because the order book technically has a visualization of the depth chart there anyway. Sometimes you have these broken up into a couple of different orders. Cancel that one. That was that one that I did before. Sometimes that's in a couple of different boxes. I think there's also chat box maybe and something else. There's another couple of boxes in here when you first open it up, but you can customize it by just grabbing it on the side. Make them bigger, smaller, whatever you prefer. I prefer to look at a bigger chart. I don't really need to. I don't even know why that's that big. I don't normally need to look at that either. I normally just like a nice big chart because that's what I'm working with. That's what I'm looking at. That's where I need to key in all my details, and this is just where I keep an eye on my position at the time. This doesn't want to hit. Let's go get it hit. This is a classic example of why you don't chase a trade. You just sit there just chasing it lower and lower and lower and lower.
When this is done, Don, Freedom Trader asked if you could, is there a way, so just say you had 500 contracts, is there a way you could close maybe half of them?
Certainly can, brother. I'll show you how to do that in just a second. Can we get a hit?
Great questions, by the way, guys. Excellent.
Oh, this thing does not want to get hit. Come on, eat it. Eat it. Once this hits, you'll probably see my trailing market move down a bit because it wants to sit $15 above the price. And come on, eat it. So at the moment, my order is in here somewhere, but there's obviously a lot of orders in front of mine, so it has to eat through them before it eats mine. So you got to wait. Or if I just do a market buy, it'll just jump the queue. I'll jump in front of everyone and just buy it at whatever price it is. Come on. There's a lot of orders. Let's do market. Let's show you how you do market. So I'll cancel that. All right, one contract at market. You press sell. Bang. I'm in. Straight away, I'm in. All right, didn't have to wait for it to get hit. I'm in the game straight away, but I would have just paid a fee. In saying that, it's a very, very small amount, 0.075% of $1. Not really that big of a deal. Right, so let's just see my active orders, which is any orders I've placed in the book. My where is sorry, stops. Trail, let's change that to $10. So you can amend any of your orders in here as well. $10, that should drop it. There we go. So that's just dropped my stop my trailing stop to sit $10 above the price or the current price. So it won't move any higher, but it will move lower. If we get a bit of a drop in price right now, this should follow it down. But at the moment with this price action, it's probably not going to move very far at all. Was it Freedom, I think you said, asked, can you reduce half your contracts? Certainly can, and I'll show you exactly how you do that. So let's just buy some more contracts right now. I've already got one contract. I'm going to buy another contract at market price. So let's double it. Let's go another contract. So, all right, so I'm in. All right, and you can see here, now I've got two contracts. It's not a separate order, so you'll never have separate trades, unless, of course, you're trading on a different market. So if you're trading on a different market, then you'll have separate positions. But on a single market, so we're trading perpetual contract on Bitcoin right now, you'll only have one position. You can't have multiple positions. The only way to have multiple positions is run multiple accounts, which is what most of us do when you're trying to play the market a little bit different. But so at the moment, we've got two contracts, but my sell orders are still only at 1 and 1 for a stop loss, okay? So that means if I walk away now and my stop loss hits, I'll still actually have one contract short because I've only closed one of my contracts. So you would have to set another sell. Excuse me. So what we can do is we can go another one sell at 4,005, something like that. And we're going to click reduce only because we only want to reduce our bag. We don't want to buy another one. And we're going to set a buy long. All right, and that will place another order in the book. So there's my other order in the book. All right, so if price comes down and touches that, I'm going to sell one of my contracts, but I'll still have one contract. And if we get down to there, we'll sell me the other one. And the reason you do that is if you have multiple targets. Now, I do this as well because I like to use dollar cost averaging to not only buy, but to also sell my contracts. So I'd use dollar cost averaging to layer or stagger my buys into the contract or into the trade. And then I'll also have sell targets that I want to reduce my bag. And it's just a form of risk management, which we teach inside our Discord. There's one of our trading strategies. But yeah, you can use this. Say if you've got a target, we can see here where we've had a couple of bodies, candle bodies close. We might move that sell order up to there because you reckon that there's probably a good chance we're going to come down, touch those bodies and bounce off. So that could be a level of resistance that we're going to have or support in the, it's resistance if we're going short, it'll be support if we're long. Same thing here, there's a couple of, I'll get that out of the way. There's a fair few candle bodies close on this line here. So you might think that that might be a line of support. So we're going to put the other sell signal there. So we've got, the other sell order there. So we've got two targets there that we could possibly hit, and we're going to reduce our bag each time, which is not only closing in profit, but it's reducing our risk as the trade plays out. Now, as you're in a trade, so I'm currently in a trade with two contracts at the moment, and you can see I'm slightly in profit because the price is lower than where I bought in, and it's green. If this is green, that means you're winning or you're in profit. If it goes red, you're losing. Down the bottom here, your unrealized profit and loss. If I hold my mouse on there, it will tell me the total for the day. Don't worry about that. So you can see right now, I'm in a 1.53% profit of my cost order, which is bugger all because it's a 10 times contract on $1. So it's not really a lot of money, but this will show you on the fly your percentage profit on loss, and it also gives you a liquidation price. So my liquidation price at the moment is 4,443. So if you wanted to put that in the book as well, so I sometimes do that just to keep an eye on things, just to see exactly how far away I am from my liquidation price. And as you can see right now on 10 times, my liquidation price is miles away. 4443. It's up here somewhere. Oops. So I'll sometimes, why is that not working? I'll sometimes put my liquidation price in the book like that, or in the chart, just so I've got a little bit of a visualization in my head, knowing where price has to go before I get liquidated. in the history of me margin trading, I've never been liquidated. With the proper trade plan, the proper trading strategies, you should never get liquidated. I don't know. I still to this day don't understand how people get liquidated, but they do. It's just, yeah, you gotta learn the basics first, and you definitely got to have a trade plan and stick to it. And there's no reason you should get liquidated. You definitely lose money, but if you hit stop losses, you don't get liquidated. Now, did you see then my stop just changed then because we're dropping price now. So my short's sort of playing out. Hopefully it keeps dropping so you can see it move. But this take profit, or so I should say this trailing stop will continue to follow this trade all the way down. So if you wanted to, risk it for the biscuit, you could actually delete these and have no sale targets, like no profit targets, but you could just have a stop loss, a trailing stop loss, and just ride this puppy as long as it goes. You could ride that thing all the way down into the ground. As long as it pops back up $10, it'll close it. So you can see now it's almost going to put my stop loss in profit. Once my stop loss gets below my entry price, I cannot lose, because even if price rejects and comes all the way back up, it's going to stop me out before it gets to my entry price, which means I can't lose. I'm going to be in profit. And if I wanted to change that even more right now, you can go back to your stops, your stop positions. It gives you all the details of where it is. And you can, you can change it. Yeah. Change it to, let's go nice and tight. We go like $3. It should move it a bit. Boom. Okay, so no matter what, I can't lose this trade because I've got profit. I can lose this trade if I don't change the amount of contracts I've got in it. So 2. All right, so my stop loss is now set for 2 because I've got 2 contracts open. So no matter what, right now, I cannot lose this trade. So I can now go to sleep. I can go to bed. Because whatever happens, I'm either going to get stopped out for a small amount of profit, or I'm going to hit my take orders and I'm going to take profit. Win, 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 win. Well, I'll leave that up while we go to the next question. I think I answered that question. Did I answer that question?
Yeah, you did.
Can you reduce half your orders? Yes,
yeah.
Certainly can.
So the next question was asked a little while ago by Randy.
Mm-hmm.
Is it not 70.075% of $10 as you're on leverage, or is it on order book value or order value?
Sorry, start that question again.
So you've got a quantity of 1 on 10x,
Yep.
so it's $10.
No. I've got 1 contract, which is equal to $1. And out of that $1, I'm borrowing 10 times to make that. So I'm only actually betting 10 cents right now. 10 cents right now. Okay. Does that make sense?
Yep.
So when it's 10 times, it's not 10 times this. That's how many you're buying, right? Regardless of what your leverage is, this is the amount of contracts you're buying. The leverage is how much are you how much are you borrowing to make up that? So let's keep it nice and simple, 100 contracts, which is equal to $100. I'm going to buy 100 contracts. How much am I going to borrow? Well, 10 times. All right. I'm going to borrow 10 times my money to make up $100. So that means I'm going to risk $10, and the lending company is going to lend me the other $90 to make up that 100. So I'm risking $10. If I get liquidated, I lose $10. All right. I'm risking $10, but I'll be making profit on 100.
So do you pay the fee on the 100 or the 10?
Pay the fee on the 100, not the 10. You pay the fee on the entire order value. Did you guys just see my stop loss drop again? See, as the price is moving, my stop loss is following it. So I'm locking in even more profit now. Now, what's my position right now? 3%. All right. Now, you'll see what happens here in a minute. If this keeps dropping, it's going to close this contract, or it's going to reduce my contracts by 1. So we'll just see how this goes. We'll let it play out. Hopefully it does some tricky shit to show you exactly how it works. But regardless, I can't lose this trade. I've already locked in like 2.5% profit. It's $2, but anyway. Any other questions?
Let's have a look.
If you do have questions, guys, now is the time.
Yeah.
So Vicky asked, do you watch your trades in order to stay safe?
Yeah. It depends. So I've got 2 accounts with BitMEX. One I use for low leverage swing trades, and the other one I'll use for scalping. So if I'm scalping, yes, I'll sit there and watch my trade. But when I'm scalping, I'm generally only in trades for like, it can be anywhere from literally 30 seconds to half an hour maybe maximum, if things are really, really slow and I'm wanting it to play out. So yeah, I'll sit there and watch it if I'm scalping. I'll have lots of coffees, and we generally jump on a group chat so we can all sit back and talk shit for a while. Gets pretty lonely by yourself.
Yeah.
But if I'm swing trading, so lower leverage, and it's more so I've done my technicals and worked on a chart for a couple of days, and I've got a pretty good indication that over the next week or so, Bitcoin's going to probably go down 20%. Well, then on my other account, I might set a 3 times leverage, larger amount of money, and just sit on it. I'll use futures contracts rather than perpetual, so I don't want to get hit with all the fees and shit all the time. So I'll use futures contracts, and I'll set a short on, and I'll just let it play out. So I'll keep an eye on it, but I don't necessarily have to log into BitMEX and watch it. It'll be more so I just use TradingView and just keep an eye on it and make sure everything is going to plan. But the beauty of running 3 times leverage, my stop losses are, plenty of room. Oh, there we go. My stop just hit. Now you can see how that one order didn't get taken out of the book, but the other one did. The reason that one did is because I had reduce only, and this one did not have reduce only. So what would happen right now? So I've closed my contracts and I've made profit because I hit my stop loss and sold in profit. But what would happen right now if it comes down and hits here? It'll actually buy another $1 worth of contracts to go long, even though the price is coming down. So that's why you got to make sure you click reduce only or cancel your contract. I just got way off. Yeah, so I'll always keep an eye on my trades. You use TradingView, set alerts and stuff like that on your phone to make sure everything's going to plan. I chart Bitcoin like 5 times a day, so I've always got a pretty good indication of where things are going. So I don't really need to pay that much attention. But if things start to change over the course of a couple of days, if my mind has changed and I've turned into a bull from a bear, then I'll probably log into my low leverage account, and I might readjust my position. Might average out some bags just in case. I might close the position for a small profit or a small loss. Just depends. Yeah.
Sweet, Don. Eugene asked, on his BitMEX page, all he sees is positions, closed positions, but not active orders, stops, fills. How can you change that?
Right.
I believe it's on the customize, isn't it?
Yes and no. Sometimes they don't show up. So if you go to customize, you do have the different boxes that you can put up. So you see how here it says position and orders. Sometimes that only says position, and you can't bring up the one that has, so you'll have positions and closed positions, but you won't have active orders, stops, fills, and I think you have order history maybe, but you don't have those 3. To get them, you have to go into accounts, preferences, I think. Yep. Is it there? I did remember it the other day. I'll have to come back to you on that one, Eugene, but you should, well, just have a look for you. Have a look now if you have the option in your customization to tick that box. It might be different. I do know on one of my accounts, I don't have my orders. I've only got position and closed position because I think from default, these are actually 2 separate boxes. From default, position and closed is one box, and then your active orders, stops and fills, and order history is a second box. And if you've closed that second box, you may have to open it again back in here. But yeah.
Craig. Randy asked, what is your most used stop out method?
Stop market. Not that I get stopped out all that often, but yeah, stop market. It's just more reliable. So The reason you have a stop market, I do use trailing as a lot, but I use trailing for profit take, not so much for stop losses as much. I'll use a stop market if things are going wrong. The reason I prefer to use a stop market over a limit or anything like that, yes, I know you're going to be a market taker and you're going to pay a fee. The whole reason of having a stop market on is because you're fucked up. Or not so much you fucked up, the price just isn't going the way you wanted it to go for whatever reason. Manipulation, you didn't see something, it's just the way it wanted to go and you were wrong, whatever. Stop market just to ensure that it actually gets done. Because the problem with placing a stop limit order, if price comes down, hits your stop limit, it puts an order in the book. If price keeps going lower and never comes back up, it's never going to hit your stop loss. And then all of a sudden you get liquidated because you tried to become a market maker instead of a taker. So you tried to reduce yourself with a small fee for the sake of missing your stop loss and getting liquidated. So I prefer to use stop market to ensure that it actually gets hit. You know, I know I'm going to pay a fee. I know I'm going to get a shit price because there's a good chance if price dumps, I'm going to sell a lot lower than what my actual stop loss was. So if my stop loss was say 10%, there's a good chance my stop market might close at 13%. I'm going to lose 13% instead of 10. I know it might happen, but that's shit happens. You're fucked up. You just got to wear it. It's there for a reason. It's there so it doesn't end up 60%, 100%. It's there to just reduce your risk. So I'm happy to lose 10%. I'm happy to lose 15, 16, 17, 18. It can close at 22%. As long as it doesn't close at 80% or 100%, then I'm happy. Because if you do a limit order, there's a good chance that it will skip over it and you'll lose 100%. And I never lost 100%. Yeah.
Don, how correlated is the BitMEX price compared to something like Bitfinex or Binance? Is there much lag and is there larger wicks because of the liquidity?
It's hard to say. So generally you get wicks when there's low liquidity, but BitMEX actually has the most liquidity at the moment, but it's kind of false because it's it's weird. BitMEX gets its price. Actually, they changed recently. So there is definitely a difference in price. Where is it? References?
Yeah, they use a mark price.
They use a market price derived by 3 different exchanges now. Exchange guide. No. Where is it? Market terms. Fair price marking. I don't know where they had it now. They used to tell you exactly where they pull their price from. So it used to technically be an average of a few exchanges. So basically they used to pull the data from 2 exchanges and then they would average it out and that's their market price. And then it goes from there with the contracting. But now it's actually 3 different exchanges. And I can't remember which ones it is. It is in here somewhere. What it'd be? Here we go. What is a market price? Market price. No, that's not what we want then. What we want is where does BitMEX get its price from? No. I can't remember where it is, but yeah, if you're wondering on where it gets its price from, it gets its price from 3 different exchanges. It then averages it out, and that's their mark price. Their mark price is down here, or index price, I should say, 4016.83, and you can see it's actually different up here. It's 4017. The contracts, even though the contracts, I believe, are only divisible by $1, meaning least amount of contracts you can buy is 1, I believe. I don't think you can buy half a contract. No, you can't. It will not let you buy half a contract. But BitMEX does only work in 50-cent intervals, though. So the actual price that you're buying at will only ever be divisible by 50 cent, even though their index price will be divisible by the cent. So there'll always be a difference between the index price and the actual price at the time. And generally when you get liquidated, this is the price you get liquidated at as well, is the index price. This also has a little bit of a buffer as well, like a little bit of a delay to account for whales trying to manipulate the books with flash crashes and stuff like that. So, you can get dodgy people who come on and do, a couple of $1 million short wick just to try and wick out a couple of people's stop losses and stuff. And this index price here will give you a buffer for that. So if you get a quick flash crash like that, it won't take any liquidity with it. It won't stop everybody out. It'll keep it all going. Just adds like a little, just a buffer basically. And there is dirty people who are out there who do that. And what they do is basically, if everybody's long and they know damn well that everyone's stop losses are just below here, they'll target to drop the price lower than that, okay? The way they can do that is by looking at the order books and see how much money they need to put on to liquidate everybody. So if they go down here and look at the price and it goes 3,910, what they can do is flick through the order book, find where 3,910 is, add up the amount of orders in the book. Mind you, it won't show you hidden orders, but if they add up all the orders in the book and they go, rightio, we need to chuck 10 million short on to get the price down here. And what they'll do is they'll chuck 10 million short on, you'll go bang, wick down here, and that'll stop out so many people it's not funny. All right, because everyone's long here and their stop losses are under here. So they know if they drive price below that, it's going to cancel so many people's contracts. What that does is empties the book, and then they can go long and push the price up because there's no one else in there. Dirty motherfuckers. That happens.
Yep. Don.
Yo.
What's the difference between perpetual and futures? Do you have to wait until the close of the contract on futures to take profit?
No, you don't. No. Not at all. Right now I can jump on a future contract, and most of the alts, I believe, are future contracts. Yep. I think only Ethereum has a perpetual, but maximum 50 times. And this is all determined by the actual amount of movement that we have. You wouldn't really go higher than 50 times leverage on Ethereum anyway, because of the percentage swings. EOS, Bcash, Cardano, Litecoin, Tron, and Ripple. Yep, they've only got, they only have futures contracts. They don't have perpetual contracts. So you've only got perpetual 50 times on Ethereum, and you've got perpetual 100 times on Bitcoin, and the rest is all futures contracts. So you can open and close as many times as you want. You just pay the fee on the open and close.
Cool. Does anyone else have any pressing questions that they have? Dan did say when trading on leverage 3 times, what percentage are you usually looking to take profit? Is there a set minimum, for example? Or is it
you're not looking at, you shouldn't really be looking at a specific percentage gain you're trying to make.
Yeah.
It's more so, where's your target? Your target shouldn't really be, like you shouldn't be saying, oh, I want to chuck a trade on, but I want 10% minimum. I mean, you can have that in your trade plan in terms of what's your risk to reward. You have to make at least that to be worth your time. But at the same time, you should at least have a target in place already. So for me, my target might be here. Oops, I don't know why that doesn't work. So that might be my target. If that target is 5%, well, then it's 5%. There's a good chance it won't go any higher than that. So you don't have to always have an exact figure in mind. You should be using your technical analysis to find where the possibility it might go. And if it's 5%, well, then it's 5%. If it's less, if it's 3%, then it's 3%. That's what it is. You adjust your leverage to suit. So if you're shooting for 3% and you can run a real tight stop loss, like 0.5%, well, then you could probably up the leverage 25 times. You're going to be 25 times 3 or 3.39 or whatever it is. So even on 10 times, that's still a 33% gain on your initial cost. So if your initial cost is $100, you're going to make $33 on that trade. So yeah, don't think too much of what's your minimum percentage or what percentage am I shooting for when I'm trading. It's more so I'm using my technicals and finding targets And whatever the percentage is of my target, that's what I'm shooting for. If my target ends up really, really shit, like 1%, I probably wouldn't bother doing the trade. It's got to be worth your time. Yeah.
Yeah, I think. So Leanne said, I don't quite get the order book and how it relates to my trades.
The order book here, Leanne. Randy, when Moon, probably late Feb, early March, I reckon we'll Moon. I don't reckon we'll Moon, to be honest.
Yeah, that order book.
Moon's gone. Moon's getting further and further away every day. Yeah, so Leanne, you don't understand this order book. So this order book it's not your order book, it's BitMEX's order book. If I make it nice and big, you'll see more detail. But basically, you can see, you can actually change the price that it changed. I've got it grouped into 0.5. You can change that to $1. So obviously it's going to move into divisible of 50 cents. So if I change that to $1, each price you can see here is added $1. So that's 4016, 4017, and et cetera, et cetera. Size, that is the amount of orders in the book. Sorry, yeah, total, yeah, amount of orders in the book. So basically so there's 371,000 short orders at $4,016. And at $4,017, there's 932,000, and et cetera, et cetera, et cetera. So I kind of made a mistake there. So when I say that's right there, it's 160. It's moving around that fast. It's impossible. But 168,000. That's not 600,000 orders at 417. That's, oh God, changes too fast to explain it. Basically, it adds on what the difference is and gets higher and higher. The red, so you can see like the red around it, and here you can see all the green. That just shows you basically a visual depth chart of just how much it increases. And these are actually orders getting executed. So see how it's flashing? See how it's flash, 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 flash. They're orders that are actually being executed, taken out of the book. There we go. Craig's just put up. XBT pricing is currently derived from equal parts Bitstamp, Coinbase Pro, and Kraken. I knew it was three. I just wasn't too sure which ones. Because composition is subject to change due to unpredictable exchange insustainability. Yeah. So yeah, that's how they get their index price. They use the Bitstamp, Coinbase Pro, and Kraken, and they derive an average from that, and that gives them their index price. And then from there, it's based on people's contracts. Yeah. Leanne, did that answer your question in regards to the order book? Does that sort of just how the size of the orders affect the price? Technically, it doesn't affect the price because these are orders in the book that haven't hit yet. So technically, the orders in the book do not affect the price until they actually get executed. But it gives you an idea kind of what could happen, if that makes sense. So let's just say you can see all these reds and you can see all these greens. Let's say if those reds were like flat. See how we're currently like up to nearly 4 million shorts all the way up to 4,030. Let's say there was only like $1,000 worth of, 1,000 shorts all the way up to 4,030. That means there's bugger all shorts in the book, and then longs are fat as there's like 10 million longs in the book. That gives you a pretty good indication that the price is probably going to go up because there's plenty of people wanting to buy and go long, but there's like nobody wanting to go short and sell. Or however, you do get a lot of manipulation. So sometimes it's really hard to read. That's why I don't pay too much attention to it. But that's technically what it's there for, to give you an indication of what everyone else is doing. So if you can imagine this order book, scrap this order book, let's make our own order book, and it's just us group of people. There's 26 people on this chat. Let's just say there's only 26 people in this order book. I could see where you've got your order on because it'll show up here and I can go, Leanne wants to sell at 4,020. I'm not going to know it's you, but I'm going to know someone in our group wants to sell $2.6 million worth of shorts at 4,022. Now I know where you want to do shit. That's basically what it is. It's just giving you a hint on what everyone else is doing, but yeah, you can't pay too much attention to it because it just gets manipulated way too much. And as Brent just said, be careful. That flashing is inaccurate. You should have the recent trades up box running because it looks like a lot. Yeah, that's right. That's why we use significant trades. It's a better indication. Cool, Leanne. Anybody else?
I think that's it, Don.
That's it. Lots of good questions. And for anyone that is interested, I know BitMEX can present its own set of complications, but if you guys kind of want to see a little bit of how we trade behind the scenes, the traditional markets, we are going to run something else like this next Wednesday as well. But this is sort of our number one behind the scenes trading strategy that we use here for us. So we do teach this to our inner circle guys as well, but probably not in this sort of way where we put it all together. So we're going to show you exactly how we trade. So feel free to go to that link if you guys would like to sign up this time next week. It is limited to 100 people, but we are going to be promoting this one pretty hard because we've been getting a lot of questions from the public community and just from people abroad about how we kind of trade. We've never done this before, so we thought, what the heck? We'll promote it and we'll show people. So if you do want to join us next Wednesday, get in there now and sign up before those seats fill. That probably will go pretty quick. But for everyone that joined us tonight, I hope that gives you a little bit more of an insight into BitMEX. We will be posting this video in the public channels as well, but feel free to jump into BitMEX or hit us up individually anytime. But most likely just pop your questions in that BitMEX channel and we'll do our best, as will the other members, to help you guys out. And thank you so much for being here.
Corey, if you think you learn a lot in that lesson, mate, you've got no idea how much stuff we've got available for you in our Discord group. There is an enormous amount of information, the PDFs, all the work that Ty's put into all the guides and stuff, our sessions, man. We've got a pretty tight group in our inner circle. We're very, very active. We're very, very close and personal. I've seen pretty much every single one of our dudes just 10 times improve their trading strategies, opening their eyes to the way that all the things they were doing wrong. And there's so much to learn that you just don't realize. You'll benefit a lot if you think you learned a lot just then. You've got tons to learn.
I think we even, with our old videos, ads, you'd have to chime in here. I can't remember if we had posted them publicly, but I think we did something stupid like 9 hours of BitMEX videos that I think we saved beforehand that we have since sort of taken down for a couple of reasons. But we were just pumping them out, and that was just totally for everyone. So we might see if we can rehash those and put them back up for you. That covers some pretty in-depth sort of stuff. It got a bit intense for a lot of people, but if you want to go from beginner to pretty familiar with BitMEX, those are some good videos. So we'll see if we can get them up for you.
100%.
Yeah.
Yeah. And for next week, if you'd like to invite people for next week, please do. If we get to 100, we'll open it up to more. So come and check out how we trade the typical markets, not BitMEX, next Wednesday.
Yeah.
Easy done.
Awesome. Thanks a lot, guys.
Cool, guys.
Hope you all got something from it. And hope to see you guys in Discord chatting and trading and winning.
See you soon, guys. Have a great night.
Catches.
Bye.